Everyone is staring at China's massive gold bars, but they've missed a classic sleight of hand. While the world watches the gold market, silver is the asset quietly giving Beijing a stranglehold over the green energy race. What if I told you that the solar panels on your roof or the Tesla sitting in your driveway are increasingly dependent on a secret stockpile that China is aggressively cornering right now? For decades, we've been told silver is just poor man's gold, a volatile industrial metal with no real strategic teeth. That is a dangerous mistake. In May 2026, the data is screaming a different story. China isn't importing record-breaking amounts of silver for jewelry or silverware. They're doing it because they've realized something the West has forgotten. You can't print silver, and you can't build a post-oil future without it. While Washington focuses on financial sanctions and digital ledgers, Beijing is playing a game of physical reality. They are moving away from the petrodollar and anchoring their dominance in electron metals. This isn't just a market trend, it's a grand strategy to turn a cheap commodity into a high-stakes weapon. So why is China paying a massive premium for silver while the rest of the world sleeps? And more importantly, what does this endgame mean for your portfolio? Strap yourselves in. To understand where the money is moving, we first need to look at how China is systematically bleeding the West of its most critical industrial asset. To understand why silver has become a weapon, we need to look at how China is silently flushing their old energy infrastructure and replacing it with something far more resilient. For decades, the world was built on the petrodollar. If you wanted energy, you needed oil. If you wanted oil, you needed US dollars. Beijing knows this. They know that as long as the game is played on the field of global oil markets, the United States holds the home court advantage. But what if you change the game entirely? What if you move the goalposts from a world powered by liquid fossils to a world powered by electrons? This is the de-oil strategy. China isn't just trying to compete with the West. They are building a parallel empire based on what I call electron metals. They have realized that in the 21st century, the true master of the world isn't the one who controls the flow of oil, but the one who controls the materials required to generate, store, and transmit electricity. And that brings us to the shocking data from March 2026. While most analysts were distracted by the fluctuations in the S&P 500, something unprecedented happened in the commodities sector. According to data highlighted by Eric Young, China's silver imports surged to their highest level ever recorded in a single month. We aren't just talking about a slight uptick, we're talking about a massive coordinated vacuuming of physical silver from the global market. Why now? Why silver? The answer lies in a structural deficit that the mainstream media is completely ignoring. According to the latest reports from the Silver Institute, we are currently facing a massive global structural shortage. For the third year in a row, the world is consuming significantly more silver than it mines. We're not just talking about a small gap, we're talking about a multi-hundred million ounce crater in supply. Most people think of silver as a financial asset, something you buy a few coins of and tuck away in a safe. But China sees it as a raw industrial necessity. Every solar panel, every high-tech circuit, and every single electric vehicle requires silver. It is the most conductive element on the periodic table. You can't cheat physics. If you want a green revolution, you need silver. Beijing's math is simple. If they control the physical supply of silver, they control the on switch for the world's next energy era. Think about the logic here. By stockpiling silver, China is effectively hedging against the US dollar. Every ounce of physical silver they pull into their vaults in Shanghai is an ounce that is no longer available to Western manufacturers at a fair price. While the West is busy printing trillions of paper dollars, China is trading those depreciating paper notes for hard, physical, conductive reality. This isn't just about trade, it's about a fundamental shift in the global hierarchy. We are witnessing the birth of a new economic order, a physical standard where real, tangible resources outweigh digital credit. When Eric Young points out that China's SHFE vaults are swelling while Western COMEX inventories are being drained, he's describing a wealth transfer that is happening in real time. They are preparing for a world where the U.S. Treasury bond is no longer the ultimate collateral. In this new world, the ultimate collateral is the metal required to keep the lights on and the cars moving. But here's the kicker, and it's a detail that will shock you. This isn't just a generic industrial push. China has identified a specific Got-Chun Achilles, an Achilles heel in the West's green energy transition. They know that Europe and the US are legally committed to carbon neutrality, but they lack the raw materials to get there. By cornering the silver market, China is essentially positioning itself as the OPEC of electricity. As we move forward, you have to ask yourself, if the world's industrial powerhouse is willing to pay a premium to secure every ounce of silver it can find, what do they know that you don't? They aren't just buying a metal, they're buying the future, and they're doing it right under our noses while we argue over interest rate hikes and inflation data. But wait until you see how this specific metal bottleneck is about to hit the very products you use every day, from your smartphone to the car in your garage. Because in the next section, we're going to dive into why the Green Revolution might actually be a trap that the West walked into with its eyes wide open. Now, why exactly is the West so vulnerable here? To understand the trap, you have to understand the science.
In the world of physics, silver is king. It has the highest electrical conductivity, thermal conductivity, and reflectivity of any metal, period. You can't just innovate your way out of using it. In the old days, silver was mostly for jewelry or basic electronics, but today, the Green Revolution has turned silver into an absolute industrial requirement. Think about this. A single electric vehicle uses roughly double the amount of silver required for an internal combustion engine. And solar panels? They are essentially silver-hungry monsters. The photovoltaics industry now consumes over 10% of the entire global silver supply annually, and that number is skyrocketing as the West doubles down on net zero targets. This is where the math gets scary for the US and Europe. While Western leaders were busy signing climate treaties, China was busy securing the physical plumbing of that transition. But here is the real smoking gun that proves China is playing a different game. If you look at the price of silver on the Shanghai Gold Exchange, the SGE right now, it is consistently trading at a massive premium compared to the prices in London or New York. We're talking about 5%, 10%, sometimes even higher. Ask yourself, why would the world's largest manufacturer willingly pay more for silver than everyone else? In a normal market, you want the lowest price. But China isn't buying to flip for a quick profit. They aren't trading silver, they're absorbing it. They're vacuuming the physical metal out of the Western exchanges, where silver is often just a paper contract, and locking it into their domestic vaults. They understand that the London and New York markets are dominated by institutional traders who treat silver like a digital ticker symbol. China, on the other hand, treats it like ammunition. By paying that premium, they ensure that the physical metal flows east, leaving the West with nothing but paper promises and empty digital ledgers. This is the ultimate Achilles heel. The US and Europe are legally and politically committed to a massive transition to EVs and solar power. They must have silver to meet their own mandates. But by the time they realize the cupboard is bare, China will already own the key to the pantry. It's a classic squeeze. If you control the silver, you control the price of every solar panel and every EV battery produced in the next decade. You aren't just a manufacturer anymore, you're a gatekeeper. But why did the West let this happen? How did we become so blind? Perhaps it's because Western central banks and policymakers are obsessed with the financialization of everything. They believe that as long as they can print money or manipulate interest rates, they can control the economy. They forgot the most basic rule of the real world. You cannot print silver. You can print $1 trillion in a weekend, but it takes 10 years to find, permit, and build a new silver mine. 10 years. China has spent the last decade watching the West print paper wealth, while they spent their currency to buy real wealth. It's a brilliant, cold-blooded maneuver. While the West was patting itself on the back for moving away from dirty oil, they unknowingly walked into a new kind of dependency, one that might be even harder to break. But the story doesn't end with industrial dominance. There's a deeper layer, more subtle layer to this strategy that most people are missing. This isn't just about factories and energy grids, it's about the very foundation of the global monetary system. If you thought the petrodollar was under pressure, wait until you see what happens when the world realizes that China has built a physical backdoor to the entire financial system. In the next section, we're going to look at the end game. We're going to look at how this silver and gold hoard is being used as collateral for a brand new financial system, one where the US dollar is no longer invited. And more importantly, I'm going to show you how you can protect your own savings before this physical standard becomes the new reality. But here is where we move from industrial dominance into the realm of pure financial warfare. Most people see silver as a raw material, but Beijing sees it as collateral. Think about the vulnerability of the current system. If you're a country under US sanctions, your digital dollars can be frozen in a heartbeat. SWIFT is a gatekeeper, but you can't freeze a bar of silver sitting in a vault in Shanghai. By stockpiling massive amounts of physical gold and silver, China isn't just preparing for a rainy day, they're building a physical backdoor to the entire global payment system. Imagine a trade network where value isn't settled by digital promises, but by the weight of real metal. We're seeing the early stages of this with the M-Bridge project and SIPs. Silver, due to its high industrial utility and lower price point than gold, acts as the perfect working collateral for these new digital ledgers. It provides a hard, tangible floor to a financial system that the West cannot switch off. So why are you, the individual investor, not hearing about this on the nightly news? It's because of a fundamental disconnect in time horizons. Most retail investors ignore silver because they're obsessed with the noise.
They see the price drop 2% in a week and they panic. They see silver as a boring asset that hasn't hit its all-time high in years. But governments? Governments don't look at next week's chart. They look at 20-year cycles. China isn't day trading silver, they are stacking it. They recognize that in a world of infinite paper printing, the only things that will retain value are the things that are essential to human survival and technological progress. While the average investor is chasing the latest AI meme stock, the smartest players on the geopolitical stage are quietly securing the very materials that make AI and energy possible. This brings us to the most important question. How do you position your own personal central bank for this shift? If the grand strategy we've discussed today plays out, we are heading toward a period of massive de-dollarization. This doesn't mean the dollar disappears tomorrow, but it means its purchasing power over real things, like energy and metals, will continue to erode. The lesson here is simple. Stop thinking like a consumer and start thinking like a central bank. Central banks don't just hold cash, they hold Tier 1 assets. In a world where China is cornering the silver market to weaponize the green transition, holding a portion of your wealth in physical commodities and precious metals isn't old-fashioned, it's a tactical necessity. It's about owning the plumbing of the future economy. You should be looking at the ratio of paper assets to hard assets in your portfolio. If 100% of your wealth is tied to a digital screen and a currency that can be printed at will, you are essentially betting against the laws of physics and the strategic moves of the world's second-largest economy. A de-dollarization portfolio focuses on things the world must have: commodities, energy, and yes, the electron metals like silver that are currently being drained from Western vaults. This isn't about getting rich overnight. It's about not being the one left holding a bag of paper when the music stops. We are moving away from an era of financial engineering and into an era of resource realism. The sleight of hand we talked about at the beginning is almost complete. The West is left with the debt, while the East is securing the physical collateral. But how does this all end? Is there a way back for the West, or has the end game already begun? In the final part of this video, we're going to tie everything together. We'll look at the ultimate forecast for this metal war and the one question you need to ask yourself today to ensure you're on the right side of history. Because the window for cheap physical insurance is closing faster than you think. So, where does this leave us? The era of viewing silver as just the poor man's gold is officially over. In a world defined by the Green Revolution and escalating economic warfare, silver has been promoted. It is no longer just a shiny metal. It is the master key to energy security and a vital pillar of financial independence. While the headlines are obsessed with interest rates and political theater, China is playing the long game. They are physically securing the future, block by block, ounce by ounce. They aren't just participating in the global market anymore. They are positioning themselves to dictate the rules of the game. They've recognized that in an endgame scenario, paper wealth vanishes, but the metal required to power the world remains. The question you have to ask yourself today is simple. When the dust settles and the world realizes that the physical supply has been drained, which side of the trade will you be on? Will you be an owner of real assets or just a spectator watching the West scramble for what's left? The window to secure your position at these prices won't stay open forever. History shows that when a resource transition happens, it happens slowly at first, then all at once. If you want to dive deeper into how to play this shift, I've put together a list of mining stocks that are positioned to benefit from this supply crunch. Comment silver below if you want me to break those down in the next video. Don't just watch the shift happen, prepare for it. Thanks for watching, and I'll see you in the next one.